Greetings, Trigon shareholders and other stakeholders. Wanted to talk with you today about the filing of our 43-101 feasibility study produced by SRK, where you can look at the third-party details of what the Kombat mine looks like as an operation and an investment. The results of the study, we have a pre-tax net present value at a 10% discount rate of $116 million US and an internal rate of return of 285%, really staggering returns. What I want to talk to you right now is about what that study doesn't include. So that looks at our current open pit operations, and then it looks at the first stage of our underground, the Asis West mine. Right off the bat, it only looks at 6 years of mine life. So for SRK, they were able to look at the drill data that we had and put together mine plans for 5.8 years of mine life. That is only a fraction of the resource. In fact, our resource actually grew from 7 million tons to over 10 million tons in SRK's resource estimation, but only a fraction of that is included in the study that was put into the mined reserve. As a part of this study, it looks at us expanding from our 1,000 tons per day to 2,000 tons per day. And this is 1,000 tons per day from the open pit and 1,000 tons per day coming from the underground. However, because it only incorporates the 3 years of open pit mining and doesn't include Asis Far West, our next stage of growth, what it actually does is it just looks at that 3 years of open pit and underground running coincidentally for 2,000 tons per day, and then runs the mill only half full for the balance of the 5.8 years. So it really underestimates the full value of the operation that we're building. In actuality, we'll have the contribution from Asis Far West. So with extended mine life and incorporating the contribution of Asis Far West of high-grade underground ore, we'll see a lot more value than is demonstrated by the study as we have it. So while it's fantastic, given today's share price, we're looking at a 300% return just to get to that net present value. There's a lot more to come as we build and develop the project. So all generally positive. If there was one thing that looking at the study that was a little disappointing is forecasted operating costs for the open pit. SRK is looking at a C1 cash cost of around $3.50 and an all-in sustaining capital costs of $3.60 a pound. Internally, we had looked at costs closer to $3 a pound, and we still are focused on achieving that type of operating cost from the open pit. That said, we did have our first quarter with some hiccups, and we reported that only a few weeks ago at around $3.90, and we'll be completing our next quarter, and we'll be looking to make some improvements on that. but in SRK's estimation, we should average out around $3.50 from the open pit, which is marginal as far as copper production goes. That is very nicely counterbalanced by our underground operating costs, and you can, and those are right in line with our expectations. So at $2.01 per pound C1 costs, and then all-in sustaining costs of $2.08 for the underground. Notably, coming into next quarter, so starting April 1st, we are aiming to be having half of our production from underground. And if we do struggle in achieving lower operating costs from the open pit, we do have a lot more flexibility to produce more from the underground going forward through the balance of this year. So the underground contribution should already improve our operating costs, but we have an ability to displace more of the open pit tons with underground tons, and really bring our operating costs down around closer to $2, and looking at 50% margins, which I think are pretty enviable for a copper mine in today's market. So all in all, I'd encourage you as investors to take a look at this at the report. Gives a high quality third party opinion on the plans for Kombat. Fantastic internal rate of return as far as Kombat goes. Great return to net present value based on the 10% discount rate, given the higher interest rate environment that we're in right now, and then a lot of upside beyond that as we stepwise develop this project, adding more through development from the underground, converting more of the resource to reserve, and the additional exploration that we're doing both underground and at surface, and then really the Asis West portion of the project, that 800-meter shaft developed on high grade ore that we'll be working to bring into production over the next 2 years. So as always, thanks for your time and attention, and stay tuned. Lots more coming up from Trigon.